Nice to have you with us. Okay, we got through our holiday. The Americans got through their holiday, and now we get to start talking about where we go from here. It's been a very interesting first half of 2023, to say the least. Obviously, no shortage of worrisome headlines, and yet lots of excitement in certain sectors like technology, AI fueling that. Where do we go from here? Well, HSBC just put out a mid-year outlook. Joe Little is the global chief strategist for HSBC Asset Management, and he joins us now with his perspectives on the road ahead. Joe, nice to see you. What is the biggest takeaway for you as we get ready for the second half of 2023 here?
Well, hi, John. Thanks a lot to speak with you again. Great to speak with you again. So, yeah, I think, as you say, we've put out our mid-year investment outlook piece, and the main takeaway is that we think we're very out of sync at the moment. The world economy is desynchronized, it's decorrelated, it's doing different things depending on where you look. We're fearful of a very elevated recession risk in Western economies. But in the East, in Asia, right across emerging markets, the situation looks quite different. So emerging markets and developed markets are desynchronized, they're out of sync. And the other thing that we're concerned about, and the other disconnect that we see is, as you alluded to in your introduction, the performance and the behavior of many risk markets in stocks or credits looks a bit out of step with how we see economic indicators at this point as well. So the strength of developed market equity markets, the resilience of credit markets, we think is a bit out of step with how fundamentals are evolving. And our expectation for profits recession and for a turn in the credit cycle means that we are somewhat cautious on investment opportunities in the developed markets at this juncture, much more focused on opportunities in emerging markets.
I want to talk a little bit about that investing suggestion that you're alluding to, but on the recessionary front, when you look at the global economy and you look at the picture in North America as well, are we in a recession? Are we headed towards a recession? And if we are, how significant of a recession should we be expecting?
Yeah, that's a terrific question. So we're not in a recession at the moment, and it certainly doesn't feel like a recession, right? As long as labor markets are performing strongly and resiliently, it's not a recession until that trend turns. But my concern is that although we have been listening to the economists tell us that the recession is coming for a while now, and in parts, the recession warnings feel like the story of waiting for Godot. In the story, Godot doesn't arrive, but the recession Godot might be about to arrive. And the reason really is quite simple. We've had an awful lot of interest rate tightening now. The fastest cycle of interest rate hikes in the US, in Canada, in Europe, in the UK, the fastest cycle since the 1980s. And when you have that amount of monetary tightening taking place, it almost always ends up in creating a slowdown and a recession. So we think it's coming probably toward the end of the second half of the year. So we think it's more of a end of the fourth quarter story in actual fact. But it's likely to mean a downwards pressure on GDP, probably of the order of 1, maybe maximum 2% over the course of the end of 2023 and into 2024. It will vary a little bit depending on where we are in the world. And then, of course, the consequence for labor markets means that we see higher unemployment alongside that, which then meets this classical definition of recession that you allude to. And my big worry is, John, that that's not something that is recognized at the moment by investment markets. It's not recognized in how the stock market is pricing itself. It's not recognized in how the credit market is pricing itself. So things look a little bit out of sync when we relate our economic scenario, which kind of looks like a replay of the early 1990s cycle, if you remember that. That's not reflected at the moment in market prices, which makes us cautious on our investment strategy at this juncture.
Yeah, and I wonder if it's just we've been hearing that word recession for so long that at a certain point investors are trying to weigh the risks of staying on the sidelines, especially when apparently AI is going to transform our life. But we could talk about that all day. I did want to get back to your strategy call. So if I were giving you a new dollar to put to work right now, where would you place it in the world?
Well, it's not the obvious backdrop, or it doesn't sound like the obvious backdrop to be very optimistic on emerging markets, does it? If we're talking about a recession in Western economies, if emerging markets or frontier markets are geared or levered plays on the global cycle, which is the old-fashioned way of thinking about them, they wouldn't sound like the natural place to focus that extra dollar. But that would be where I would be looking. I would be looking at Asia. I would be looking at the improving stories in Latin America, Brazil, and Mexico as well. I'd be looking at emerging markets as the area to spend that and deploy that extra dollar. The asset class in emerging markets is very unloved by investors still. That is understandable after a very complicated and poor performance in 2022, but it's still lagging now. And that's really interesting for me because that lagging nature of performance that we've seen over the first half of the year from emerging markets comes at a time where the asset class valuations look quite attractive relative to what we see in Western markets and relative to emerging markets' own history. And when we look at the fundamentals, well, the growth and inflation mix is much, much better, miles better than what we see in the UK, for example, where I'm speaking to you from today. The mix of growth and inflation in North Asia or in South Asia, the growth story in India remains very, very strong. So the story around fundamentals, which of course is really important for the stock market because it tells us about profits, future profits, that's looking better too. So. That different outlook from emerging markets would be the area that I'd be most interested in at this juncture.